The rise in mid and small cap stocks has been meteoric since their June lows. While at the index level, the Nifty MidCap and SmallCap indices have jumped over 20% since then, individual stocks have zoomed as much as 94%. In fact, 464 of the Nifty 500 stocks have given positive returns since June lows, led by Adani Transmission, Tube Investments of India, Mazgaon Dock Shipbuilders, Adani Total Gas, and JSW Energy. Sectorally, most of the stocks that gave returns of 40% and above were largely from the housing finance space, banks, clothing and footwear companies, quick service restaurants, consumer durables, and auto ancillaries. And analysts feel there's more steam left in this rally.
If you look at it on a 1 year, 2 year, and even a 3 year time frame basis, the Indian markets kind of stand out as compared to the rest of the world. And I think that's driven by the fundamentals of the economy. When you look at the PMI manufacturing data, when you look at the credit growth, when you look at the way Indian currency has kind of stood out against the dollar as compared to the rest of the currencies, when you look at the asset quality in the banking system, when you look at the government capex, inflation trajectory, I think everything tells you that the Indian economy is on a very, very strong footing. The fact that we are going to continue to remain one of the fastest growing economies in the world is propelling the FIIs to come back and the flows to come back in the manner in which they have. And I think this bull rally is here to last. Investors would do well to invest in India from a 2 year, 3 year perspective. There is a lot of money to be made in equities in India, and I would invest in quality stocks across market caps, large, mid and small.
The record demat account tally too is a reflection of the confidence that investors have in the Indian economy and markets. Last week, the country's demat account tally topped the 100 million mark for the first time, with over 2.2 million new accounts being added in August. That said, valuations seem to have stretched a little, especially in the mid-cap segment, post the steep rally over the past few months. By the end of August, the Nifty MidCap 100 was trading at 23.2x, an 18% premium to large caps. The Nifty Small Cap 100, on the other hand, was trading at 17.2x, a 12% discount to large caps. Analysts, however, think that sustainable strong double-digit earnings growth will be able to justify the premium valuation. For G. Chokalingam of Economics Research, there are several segments which offer valuation comfort in the broader markets. Among insurance, HDFC Life looks attractive. A few high-quality PSU banks are also below their adjusted book value, while some pharmaceutical companies offer scope to accumulate at current levels. Against this backdrop, the broader market's performance will be on investor radar this week. Investors will track August inflation data for India and the US and other global cues before taking trading decisions. In the primary market, Tamil Nadu Mercantile Bank is expected to debut on the bourses, while Harsha Engineers will open their IPO.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.